What's going on, everybody? This is the Roaming Prepper, and today I want to go over some technical things that I had learned from a financial analyst that I had the privilege of watching, as well as some stuff I heard from some bankers. And these are folks who are in this industry right now. Contrary to what a lot of people may say, not all these people are in a conspiracy. It's basically this stuff happening, even for the bankers and analysts and investors, this stuff happening way above them that they can't control, but they can see it. So I'll be right back, and let's talk about home sale prices and real estate and how that's going to hurt us possibly in the near future. I'll be right back. Welcome back, everybody, and thanks for joining me today. So I'm losing my voice a little bit. I wound up presenting several times today at work, and I'm kind of like, ugh. Anyway, wanted to go through, so we keep hearing that there are a lot of different issues, right? We have real estate, we have supply chain, we have inflationary effects, and trying to, and other stuff, and trying to understand all this stuff at the same time becomes a little bit overwhelming. But what I'd like to do is try to break it apart in manageable pieces through several videos in a series so that you all can kind of understand how each one affects the other, but see each one independently. It's a little easier to register, and I'm not a finance guy. I'm an engineer. I do have a master's in business, but not in finance. So I understand what they're saying, but I'm not so well versed that I can teach it as well as some other people can. So I'm just going to kind of give you a Cliff Notes version. So right now, we all know there's an inflationary effect, right? And in a nutshell, the value of money in any country is a function of the number of dollars in circulation as well as the country's GDP. During the Corona shutdowns, our GDP, or gross domestic product, or production capability, shrunk. But at the same time, we were throwing money into the system, right? Stimulus, 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 not only through 2020, which, keep in mind, 2020, the COVID shut us down in March, and Trump was out in December. So he had like 7-8 months. The rest of the response was not under his watch, but they kept throwing stimulus in there for various reasons. And between the two administrations, there was just too much money. You know, we can blame one or the other. Personally, I think just across the board, Washington screwed the pooch. So we have a lot of dollars in circulation, but the economy has not grown the way it should, because it contracted so much. It still isn't where it should be. And so we have an inflationary effect. When dollars are worth less, you need more of them to buy the same product, right? We all kind of understand that. So housing and real estate right now are going through a lot of hurt. So I'm going to try. So what I want to show you here, what I want to show you here, if I don't close the screen again, is a screen. This comes from Redfin website, right? And so what this is showing us is the median sale price. Now, just high school math refresher, mean is average, right? You add them all up, you add, 50 home values up, and then divide that number by 50, and that's your average, that's your mean. Median is you take the highest and the lowest and all the ones in between. You don't average them out, you just pick the middle one. Now, neither one is a bad or good measurement. There's simply two different measurements that we can take to understand the market. So what this is showing is that the middle home sale, that's pretty neat, ain't it? I'm not sure how I do that, but I thought it was pretty cool. Anyway, the median home sale price is going down. Now, according to this particular chart, because that's kind of creeping me out, you can see that this went up by 40% and then dropped significantly here in 2023. So let's see. So what you see here is, let me make sure. So this is after, let's see if I can mark it here. No, it won't let me do it. Hold on. This is after the, oops, hold on. Come on now. There we go. Ha. All right, success. So let's get my pen working here, and let's talk about this guy. Ah, bingo. Here we go. Sorry, folks. I'm trying to, okay, so you got it here. Now what you're seeing here, this is after the 2008. This is actually 2013 here. So this is almost 2008. So you see the market's coming up. It's coming up that way, right? And then it kind of levels off, and off we go. Then here, boom, there's the Rona, right? So let's do a different color for that. That's terrible. Let's try something else. There's the Rona. Okay, you following me? Now, because of inflationary effect and because of demand, because everyone was working remote, a lot of people who were renting are now buying homes. And because we were working remote, they were buying further away, which is why so many people from California wound up in Phoenix, they wound up in Vegas, they wound up in Austin, they wound up in the heartland because they could work remotely. But the companies are now going back to be in the office. So what happened is these, oh, that was a big arrow, didn't mean to do it, that thing, that home pricing's going up. And again, this is from Redfin, so you guys can look this up yourself. And what happened, it's happening is now it's starting to go down. What you have is because of and the inflationary effect, you have a lot of, let's cancel that. You have a lot of financial, a lot of people with money, but the dollar is devalued, and now they're trying to sell because they can no longer live that far from work, or they can no longer afford the payments, especially if they got an adjustable rate mortgage. As the interest rates went up with the Fed, their payments went up month by month, and now everyone's trying to sell, but the housing price, it's forcing the housing prices down because basically you can't build houses that fast. So you have a specific quantity. The cost of keeping those homes is too high, so people are trying to sell them, or they're trying to move back closer to work, whatever it is they're doing. The same thing is happening to commercial real estate. And this is where we start running into problems. So if you look back at 2008, now this is office vacancy rates available from 2006 to 2022, right? So you see here, so I'm going to get my pen working up here. Hold on just a second. Oh, that was cool. Oh, no, don't want rainbow pen. That would just confuse the crap out of me. So here we go. So this right here, this is 08. Oh, that sucks. Let's try that again. This is 2008 right there, right? So you see we hit the bottom and then it starts going up again. Now, you notice then, it goes up, the market gets hot, and then it starts to decline. Now, you notice one thing. So availability and vacancy are going down. So these are office vacancies. This is commercial real estate, right? Then it crashed in 20, right? Everyone worked at home, boom. Now, here's the thing a lot of people don't understand is that a lot of the office cost for a company can be up to 30% of their profit, of their revenue or their books. So if you're making, $100 million a year for your company, it could be, 20 to 30 million on office space, on real estate. That's super expensive. So a lot of companies, even though some are demanding the employees come back, some are not. What's wind up happening is, like for my company, for example, we had 3 floors in a building. Well, now they've gone away from that. We have half a floor. We have 10 desks or 10 offices with a conference room and a kitchen and whatnot. And it's basically first come, first serve for everyone from the vice president down to the new kids coming in from college. So basically not everyone has gone back. And as you notice, here you're starting to see as we're going to 22 here, and again, this cuts off at 22, it started to go up. Now what's happening now is we're seeing a repeat of this. The vacancy is starting to decline as you go, and then again it cuts off before 23. But what you have is you have a lot of vacancy, but you don't have a lot of demand because people are not going back to the office. So this is just the beginning of the increase of availability, right? They're now more and more is available right here, but nobody's renting them. And who has the most exposure to commercial real estate regionally is regional banks. And this is where it gets dangerous because, for instance, at least in one report, JP Morgan Chase only has about 8 to 14% of its portfolio in commercial real estate, whereas certain regional banks could have up to 30 or 40%. Now remember how Silicon Valley Bank failed was they were too heavy in tech, 35% tech. When tech took a dive, companies started pulling their money to pay their people and the bank went under. You could see the same thing. So we just covered residential real estate and commercial real estate, and you notice the sale price is crashing, the median sale price is crashing on the residential properties. At the same time, availability on the commercial real estate, basically office space, is climbing. And it's still climbing. Unfortunately, that chart cut off there, but it climbed. But demand is dropping, and you're seeing housing demand drop as well because people are suffering from inflation, higher interest rates. It's harder to get credit. It's harder to qualify for a loan. So you're seeing more availability and less demand, and that's why your price is starting to drop. And that's where it starts getting dangerous. So let's see what else. I had another one for you guys here. Okay, here's the median sale price. Now again, not the average, not the mean, but the median. And as you can see, as you go into 2020, November of 22 was already dropping. Okay, so you notice the same pattern. The commercial real, let me see if I can, I wish I could overlay these, but instead I'm just gonna draw for you guys. So you got your commercial real estate, right? Remember, commercial real estate was doing this at the end of 2020 and it was starting to drop and then it gets cut off, right? Well, this is residential sale price, also dropping. Now you start to see the pattern, right? You got commercial real estate is starting to crash. You have residential property prices are starting to go down because nobody can qualify for a loan or can get the money to buy because the price is elevated. Now the prices are crashing because nobody's moving houses. And you see now we have, this is slightly different from what happened in 2008. In 2008, residential crash, you remember Fannie Mae and Freddie Mac or whatever they're called, and the rentals dropped off, right? Rental space. But commercial didn't move. The offices kept their contracts. Now that's the third leg of the stool. That's one big difference than what happened in 2008. And that's why a lot of analysts are super concerned about what's going on. Again, that, hold on, that, so those charts were from Redfin. Here's another one. And this is from Yahoo Finance. U.S. median rent dropped 4 straight months in a row. So remember during COVID, rent kept going up and up and up, right? And now it's cut off here at the beginning of 2020, but you see in the drop. Now, if you remember the charts I just showed you, so now you have, oh, that was a bit too big, sorry about that. But now you're seeing commercial, rental, and residential prices all dropping at the same time. That is where the danger point comes from, the real estate side of the economy. And you guys kind of understand now. And again, I may not be explaining it. Obviously, there are people who know this better than me, but this is kind of what I took away from listening to that analyst. And let me see if I can bring these guys up all at the same time, because I'd love to be able to, here we go. So here's the median sale price on homes, right? Remember, crashing. Let's see if I can get there's your, and again, this is cut off end of November, but there's home sale price, and rental. Oh, sorry. Got all sorts of stuff here now. Let go. And rental. You notice all of them are curving down. And granted, some of my charts cut off at the very end of 22 or very beginning of 23. All of them were trending down. That is what's concerning a lot of these analysts. If you watch Economic Ninja, you watch the finance folks, everyone's saying we're going to see a housing crash. It's because of stuff like that. And here's your office vacancy, and you see vacancy is going up, which means there are less and less offices being rented at the end of 22. That's like the very beginning of 23 here. And they're still going up. And when you have, let me see, this shows vacancy rate, available rate. So when you start seeing large double-digit changes in home sale prices, in rents are going down because people can't afford to rent, or they're vacating. Now that also goes hand in hand with the homelessness. We're now seeing people get depressed, they lose their house, their apartment, they lose their stuff, they start self-medicating, and now you have a drug problem. And we're being flooded with fentanyl from China. So you kind of see how this all comes together. And this is what's concerning these analysts. So, folks, I probably did a terrible job explaining this to you guys, but that's part of the whole package. Everything is, from the real estate side, is showing a really dangerous trend. Now, where it'll go, that it may come to a screeching halt, right? Something could happen, the economy could turn around. Those things do happen. But the fact that since the end of 2020, you're starting to see all those factors, the favorable factors, home price, occupancy, rental price, are all starting to go down because nobody can afford, or they're not qualifying, or they're having to short sell their homes. The companies are not going back to fill up the office spaces. There's a lot of factors. And again, I may have done no justice to those analysts who took the time to talk to me. But folks, it's important that you understand this, because this is going to be ugly. And even if you're home and your job is secure through all of this, there are going to be a lot of people who are not. And that's going to lead to more crime, more instability. So that's it for the housing and real estate part of this economic debacle we're witnessing. What I'm going to try and do is break down some other stuff regarding energy and a few other factors that I can speak to a little more in detail. But yeah, dangerous stuff at dangerous times. I hope this helped you guys a little bit. I hope this gave you a little bit more understanding. And again, I'm an engineer, I'm a business guy, I'm not a finance guy or a market guy. So I kind of understand what they're saying. I understand the gist of it. I can't explain how all the little pieces work, but I can identify trends. That's something engineers do. And all of them are going down, and that concerns the crap out of me. It should concern all of you. So refinancing a home doesn't make sense. If you have a good interest rate, why refinance, right? Moving, if you don't have to move, you're not supported by like a company reload where they give you a package to help you move and they have people to help you. It doesn't make sense. So people are not renting because they're moving in with family. They got multiple families. Even in my subdivision, you know that there's like grandparents, parents, kind of like the old days. They're all moved into one house and they're splitting the rent because that's the only way they can. A lot of the younger professionals, these young kids coming out of college or high school, trying to find their first place, they're having to shack up, room up with 3, 4, 5 kids in a rental house. So instead of having 5 separate rentals, which helps the economy, all 5 of them are squished into one house because it's all they can afford is one bedroom or to split a bedroom with someone. So you kind of see how all these little pieces fall into the pattern, and the banks at most risk turn out to be, from what they're telling me, the regional banks. And this is where you're starting to see the First Republic and the Silicon Valley starting to crash. Granted, Silicon Valley was more tech industry, but the smaller banks have more exposure to some of these volatile sides of the market, and everything's going the wrong way right now. So hopefully it'll change, but at least now hopefully you kind of know enough to go do your own research. Like I said, I probably hacked it up. But anyway, look, guys, that's it for tonight. God bless, Godspeed. I hope that was helpful, and I will put the next part of the economic issues on a separate video. Just an FYI, this week I will be absolutely hooked up, and possibly into next week, with we're getting repair upgrades done to our house. So if and when we do have to reload, we can get the maximum price for the house when we leave. You guys kind of follow me there? But also just work-related stuff and family stuff. So a lot of my videos are going to be pre-recorded this week, but you guys will get through it, and you'll get through it with me, and we can learn something together. Good. God bless. You guys take care. I'll see you on the next video.